Well, let's take a look around the weekend housing markets. And across the country, there were 1,716 auctions. That's around 200 more than the week before. And the clearance rate of 64.7% is lower than the previous week. Now, in Sydney, 635 auctions, around 70 more than a week earlier. 65.7% of those were sold. In Melbourne, there were 648 auctions. The clearance rate here was pretty much steady, around 70%. In Brisbane, 82 auctions, 61% of them were sold, which is a touch higher than normal. In Adelaide, which has been the hottest property market, of course, 47 auctions. The clearance rate here dropped off this week, still a fairly healthy 74.5%. In Canberra, 68 auctions, the clearance rate just 51.5%. Canberra, it seems just at the moment a little soft. And in Perth, just one of 11 auctions cleared, but 559 private sales. So let's bring in here Eleanor, Creagh, senior economist with REA Group. Look, I've got to say, Eleanor, it's certainly a market that's hanging in there at the moment, but there's still the issue about the whole issue of banks right now are being prepared to lend to people at these valuations, which kind of gives you some confidence, doesn't it, about where the property values the banks at least think are going to in the future.
Yeah, look, I mean, the economy is expected to continue slowing over the year ahead. The unemployment rate also expected to continue picking up a little bit. But overall, the housing market is expected to continue to perform. Now, we might see price growth slowing from that pretty quick pace we saw last year, but we are expecting that the housing market is going to continue on that kind of stronger trajectory.
But you kind of get my point, don't you? All the profit reports that have come out from banks show bad and doubtful debts close to all-time record lows. They're ticking up at the margin, but not ticking up much at all. So the banks, to make money, need to lend more money out, even at these property valuations. If they were at all concerned about the property valuations, they would not be lending as vigorously as what they are.
Yeah, certainly. And I mean, we're seeing that buyers are taking up that credit as well, and certainly buyers looking to the future, probably looking to those future borrowing costs as well, and expecting that interest rates are going to be cut at some point in the second half of this year, probably propelling buyer demand forward. And we're continuing to see that reflected in those stronger conditions on the ground. We saw those auction clearance rates are pretty solid. Auction clearance rates sitting around their highest levels that we've seen over the past 2 years. So certainly housing market activity has continued that strong momentum that we saw throughout 2023. At the same time, we've also got those continued positive factors like stronger population growth, rental markets remaining very tight, and that overarching supply picture where housing supply still remains pretty constrained as well.
And you're right, you've just outlined pretty much the scenario by which banks and also property buyers right now are confident to go into the market. You mentioned the rental markets are tight, so rental income is likely to rise. Interest rates will go down. There's a squeeze on home building. There's not enough homes, and so there's a shortage of supply, which pushes prices higher. All of this leads to the suggestion that home prices probably, the supply side's not going to get fixed. The demand side's still going to be there. There's going to be fairly robust growth in home prices from here on in.
Yeah, look, that's exactly right. And we are expecting that home prices are going to continue to grow throughout this year. And we're seeing that confidence in market conditions really reflected on both sides of the market, I think, at the moment, with buyer demand and those strong auction clearance rates that we're seeing, properties moving through the auction market, but also vendor confidence. So the uptick in the number of properties heading to auction and being listed on realestate.com.au. So new listings in both Sydney and Melbourne in January were at their highest level in over a decade. So both those property markets experiencing their busiest start to the year in over a decade. So really that confidence reflected on both sides of the market.
Okay, and the only caveat to that outlook and to that story is the employment story, whether unemployment ticks higher and that takes some of that demand out of the marketplace, or indeed really whether there are other economic storm clouds. You can't really see them at the moment if the scenario is that interest rates are going to fall sometime later this year.
Certainly unemployment is going to be a risk factor. So we know that if the unemployment rate does end up pushing significantly higher or much more than we're expecting, then certainly that could, I guess, change the outlook for the property market a little bit this year. But at the moment, we are expecting that the labour market is going to remain pretty resilient, just like the housing market has remained pretty resilient in the face of all the interest rate tightening that we've seen. And the unemployment rate will rise. It will rise, but it won't rise by so much that we'll really see that downward effect on property prices that can come to fruition via a sharp rise in unemployment.
I'll tell you what, Eleanor, always good to get your input and many thanks for your time
Thank you for
today.
having me.